Hi there, this week's episode includes bounce back loans, C-bills, R&D, furlough schemes, self-employed income support scheme, property sales, and probably a whole bunch of other things. Yes, hi, I'm Martin from Robson Laidler with this week's update. Bear with me, there's quite a lot to get through. First off, we've got an issue to highlight for those claiming R&D tax credits who are also using the bounce back scheme or the coronavirus business interruption loan scheme. And the key point here is that all of these three things are classed as state aid, and R&D in particular relies on the fact that you haven't had any other forms of state aid in order to claim it. So what we could see is some interesting developments on this area. I'm not sure the original intention was to stop people from claiming R&D just because they were affected by coronavirus, but as yet there is a kind of pin in this. It looks like R&D could be affected if you've claimed bounce back or used the bounce back loan scheme or the C-bill scheme. We'll update you further once we know more. We'll move on to the self-employed income support scheme next, and just a couple of interesting quirks here. First of all, I mentioned that of course it's been extended and there is now a part 2. Part 2 is basically the same as part 1, with the exception that it is capped at 70% rather than 80%. So for most, that means the assumption is that you're not going to be as affected possibly during the period of the second claim. Of course, that remains to be seen. It's also possible that you weren't previously affected but now will be affected, and if that's the case, you can claim part 2 regardless of whether you claimed part 1. If you haven't yet claimed part 1, you've got until the 13th of July to do so. So after the 13th of July, you will no longer be able to claim the 80% self-employed income support scheme version 1. You'll have to wait till August to claim part 2. Another quirk on the self-employed income support scheme, of course, is that if you're currently claiming universal credit, you do obviously have to report the fact that you've had your grant. It is income. Now that could play havoc with the amount of money you get on a monthly basis from universal credit. But don't forget, whilst you're reporting the amount of income you've had, it might just be that the grant is your only income. You probably still have expenses. If you're still paying for van insurance, shop insurance, buildings insurance, paying for subscriptions, things generally, topping up employees' wages, that type of thing, then don't forget to include those expenses when working out how much income you've had for universal credit purposes. Another interesting point that seems to be coming up is for those who are trying to claim bounce back loans where you're a sole trader and you haven't got a business bank account. Now, I haven't seen too much of this mentioned, but I did have one example where, because someone was using just a normal personal current account for their business account, the bank refused to give them a bounce back loan. I'd be interested to know if anyone else has been affected by that or anything else like that. Now on to updates for the furlough scheme. So most of you, if you're already in the loop on furlough, you don't need me to go through it again. I'll just summarise by saying you can pay your employees 80% of their salaries and the government will basically reimburse you for that. If you want to pay them 100%, you can, but you will not be reimbursed for the additional top up of 20%. Now going forward, there are some interesting quirks here. Basically, the furlough scheme was extended and it will in future be able to include part-time furloughed people, but it's worth noting that the amount of subsidy from the government is reducing. So there's a whole host of dates and times, but in short, from the 1st of July you'll be able to part furlough people. You'll only be able to include people in July onwards furlough claims though if they've already completed a 3-week furlough period by the time we get to the 1st of July. So 10th of June is the last date you can start a new furlough period for an employee. So it's worth bearing that in mind. That's any day now. If you've had someone on furlough for the last couple of months, they can just stay on furlough, of course. They've already got their 3-week window. From the 1st of July, you will have new rules on how the scheme works. And the key thing is that you will not be able to have a new furlough claim starting from the 1st of July if you have not already had someone on furlough. So if your business has not been affected but somehow is affected in July, August, September, October, you will not be able to furlough your staff. And I suppose the presumption there is the lockdown rules are getting easier, so it's less likely a business will become newly affected, but of course you never know. It's worth mentioning as well that on the original furlough scheme, you must make any claims for periods up to 30th of June by the 31st of July, otherwise you will not get that government subsidy towards those payments. Now just to recap on the extension of the furlough scheme, 1st of July you will continue to get 80% plus a contribution towards pensions and national insurance. From the 1st of August it's 80% but no contribution towards the pensions and national insurance. That's the first step. That will cost employers a little bit, but hopefully not too much at that point. From the 1st of September, the furlough rate paid to employees is still 80%, but only 70% will be reimbursed. So if you want to keep an employee on after that date, you will have to fund the 10% to make it up to the 80%, and also you're funding the full national insurance and pension. And as we're going to October, the amount reduces to 60%. So of the 80% being received by the employee, the government will only give you back 60%, or 3/4 of what you pay out, if you want to put it like that. And again, the employer will have to bear the national insurance and pension contributions. My final point this week is on property sales. And if you're a non-resident taxpayer, you'll be aware for some time now you've got to declare property disposals within 30 days. It's worth just repeating now that we've actually seen our first examples of this coming through and going through, that if you're a UK seller of a property and it's not your main residence, and it's a residential property, as well. So if you sell a buy-to-let or you sell an empty house that you've inherited or something like that, then you have to disclose the gain within 30 days of the sale and work out any tax and pay any tax as well. So that's just a quick reminder. We knew this was coming in, but it is live and we are now seeing it. That's Martin with this week's update. See you next time.